Gold is down from last week's gains as geopolitical tensions subdued over the weekend. We have Frank Holmes joining us this Monday for a brand new gold game film. Next. Frank, good to have you back with us.
It's great to be here in Toronto. It's perfect weather in Toronto.
Now, Frank, let's start by talking about the gains we saw in gold last week. As we speak this Monday, gold is still above 1,300, but do you see pressure here ahead for gold?
I just think your summer doldrums is going to be any pressure. And I think that we have some important economic data coming out this week, like PPI, Purchasing Power Index, which is really a precursor to CPI numbers, which everyone follows for inflation, but is expected to be around 1.6%, and five-year government bonds are approximately 1.6%. And so therefore, this is an inflationary number excluding energy. And I think it is a key factor for investors to be cognizant of, is that you can have a strong dollar because of all the drama that's taking place in the Middle East up to the Ukraine. But at the same time, if we have negative real interest rates in America, gold can rally also. So you can have both gold stocks, and the dollar all rallying together.
Frank, you mentioned inflation, and a key data point investors were eyeing over the weekend was inflation data coming out of China. It came in at 2.3 as expected, but way below the yearly target of 3.5. What do you make of this number, and could it potentially help gold?
Yeah, I think it's very good for gold. I think because it puts less pressure for rising interest rates. I also think that for China, the big volatile component of inflation is food. They've always had these issues with food inflation, and I think this is very positive and constructive, because this idea that people have full bellies and it's not costing them a ton of money makes people feel better.
Frank, let's get to our OT segment now, opportunities and threats in the gold market. Let's start with the data surrounding Indian gold imports from Switzerland in June are raising some eyebrows. Over 40% of the gold leaving Switzerland is reportedly landing in India, compared to the 33% of bullion exports to India in May. What do you make of this, Frank?
Well, it's probably better policies out of the new leadership in India, which commented would make it easier for Indians to be able to import gold and coming from Switzerland. And it also appears as a shift of how gold is going into China. The normal path of going in from Hong Kong right into China, it's shown a big drop. So India's positive, showing a rise, but the avenue through Hong Kong into China appears to have declined. I think that it's just positive, constructive to see movement of gold.
Another opportunity here, Frank, comes from Yellen's number 2, Fed Vice Chair Stanley Fischer, who was calling the U.S. and global recoveries disappointing. Can this signal a delay in raising interest rates, Frank?
Yes, I think that the real issue that we want to take out last week was the EU and Germany. 2-year bonds went negative in Germany. That means big slowdown. That's deflationary. And if you look at Kitco's charts on gold in euro terms, it's outperforming dollars. So we're seeing a lot of pressure on the euro with negative real interest rates. And I've always written about this, that whenever a country has negative real interest rates, gold starts to rise in that country's currency or the economic community of Europe. So I think these are positive and constructive factors for gold.
Frank, now on to threats. Equities, we saw them hit hard last week, but could they be making a comeback, and could this hurt gold, Frank?
No, I think that we had the great run in gold from 2000 right to 2008, and that was a great run in the stock market. So it's regarding global economic activity being robust, and I think what we saw last week was a rebound predominantly in the big caps. A lot of the small caps, there's this massive bifurcation in the U.S. market between small cap, micro cap, great quality companies, and big cap. So liquidity seems to be focused on the big cap as the Federal Reserve is pulling away money out of the economic engine. You're starting to see this illiquidity show up in the smaller cap companies.
Frank, let's wrap this all up now with gold's touchdown pass of the week. We have GDP numbers coming out of Europe this week. We have the PPI sales, as you mentioned, and retail sales in the U.S. What are you eyeing?
Economic data, I think, is the PPI because it's a great precursor to CPI, and inflation is an important value driver for the direction of the price of gold.
Frank, as always, thanks for your thoughts.
Happy investing.
And thanks for watching this edition of Gold Game Film. We'll see you next week. Thanks for watching.